In this video, I'm going to explain what is a moving average, how can you use it to find trades, and later in the video, I'll show a live trade as an example of how to profit using this indicator. So, what is a moving average? It's the average price of the last X amount of closes of bars. So, you can make the moving average be over the last 20 bars, for example, or if you wanted it to be a stronger indicator, you could use a larger amount of closes, like 100 or 200. So what this means, say we're using a 5 moving average, it would be these 5 bars here, this close, this close, this close, this, and that would, and the average price would be given of these last 5 closes. So that would be around here, be the average price of those. What I use is an exponential moving average. An exponential moving average places a higher priority on the later closes. So the final close is more important than the previous close, which is also more important than the close before that. So on all of my moving averages, I use exponential moving averages, which place a higher priority on the later closes. So looking at this chart, if during this area, I know that the market is bullish, right? The lows are moving up. The lows are higher than prior lows, and the highs are higher than prior highs. And I want to take advantage of moves like this. During this, I know the market's going down. We have this move down. The bulls were no longer going up here. Bears are going down. And I want to be able to take advantage of these moves here. So let me draw in the 20 period moving average. And notice how well this moving average connects with these bars. We're talking about we want to take advantage of a move up like this after we know that it's bullish from this. Look how once the market breaks out above the moving average here, once it breaks above, look how it comes back and touches the moving average here. Touches it here, here. These tails are created and they're bouncing off the moving average. And then here you can see it breaks through but then fails to go lower. The moving average acts as support and resistance. And it's a type of support and resistance that moves. It moves along with the bars. So we're expecting the market to go up after these higher lows here. We break above the moving average, and after these tests of the moving average, then we get a good looking signal bar here, or any of these bars would also be buys above here. And look what we get afterwards, a move up. Looking over here, we've had 5 bars down, well really 7 bars down, all this buying is ending. The buying has ended and the bears are taking over. We're now below the moving average. And look what we're starting to get. We're starting to get these tails above bars. The market is bouncing against the moving average. When you're starting to see this and you're starting to see the bears start to gain strength below the moving average, you want to look for shorts below these bars. Shorting perhaps below this bar here or here or here. Then working down, you see the bulls are attempting to go higher again. And look, they're bumping back up into the moving average. And you get a bearish bar. And if you're able to sell below that, then you can take advantage of a move like this. So continuing on, the market continues to test the moving average all day. It's only in the strongest of trends will the market not be coming back and touching the moving average. Even here, I would consider this a test of the moving average. Now, it's not coming up and directly touching it, but it's in the area, and the market is finding resistance at that moving average. And it's finding the same thing here. Now, we break above the moving average here. Now, there's a couple legs of a pullback, and look what we get. These 2 tails on the bottom, and a bullish signal bar. And what follows? This move up. Similarly here, market tries to break down below the moving average, fails. Then we start to maintain above the moving average. We close above it here, We have this tail on the bottom here, tail on the bottom here. Perhaps there are buyers above this or buyers above this. And look at the move that you can get out of it. First time market comes back, touches it here, and it gets buyers. Breaks below here, but once it pulls back, it gets sold at the moving average. So this is acting as resistance. So anytime the moving average, anytime price is below the moving average, like through here, it's going to act as resistance. Once it gets above, it's going to act as support. And go back and look at your charts, and you can see how that moving average is affecting those bars for the entire day. Let's look at examples on the next day. Moving average coming up here, a sort of double bottom here, and the market has a move up. Test it again here, but here market manages to break out below. At this point, the market is pulling back to the moving average and it's acting as resistance. And look at this move that followed after that test there. Where is your entry point? Perhaps Sun might sell below this doji bar here. It is a secondary short, so there's a first entry short there and a second entry short. Second entry shorts are better than first entry shorts. I think the best short here is below this bear bar. So this is following multiple tests up by the bulls here. And those tests up keep failing. And then you get this good looking bearish signal bar. It's also a double top, this high and this high. So we have a double top right below the moving average. Bulls are having multiple attempts to go higher. Also, the close of yesterday is below. And when you have this big open area like this down here with a target down here, there's a good chance that the market will want to go and test that close. So we're below the moving average. We have a good looking bearish signal bar after multiple attempts for the bulls to go higher. We have a double top and we have a target below. This is a great area to be taking shorts. Now, what profit level do you go for? Well, fairly standard way I take profits when I do this is I will go for 2 times my risk. So I'll put a stop right above the bar and I'll sell right below it. And I'll go for 2 times my risk. What you can also do is go for a larger swing. So like I said, we have this target down here. You could go for a swing down towards its close. So there you'd be going for something more like 4 times your risk. But that's great. Some of the times the market's gonna go back up and stop you out. But when you manage to get that 4 times your risk trade, that's gonna be huge for your numbers, for your profit factor. These are the types of trades you really want to be keeping an eye on. And these are the trades that you want to be adding to your tool belt of trades if it's not already there. Looking at the next day, I'm looking at these bullish bars here that are above or right around the moving average. Moving average is working up. Coming up into this area is testing the moving average here. Then we get a smaller bullish signal bar here. So say you take that trade and you go for 2 times your risk, or you're going for some sort of other target that's up here, maybe a prior high. Well, the market did pull back here and you would have been stopped out if you put your stop below that bar. Some traders might have moved their stop up to below this bearish bar here. So it'd be a secondary short and they would just get out with a small profit there. Some traders might do that. Some might hold and let their stop get hit down here. So you take this trade. Let's look at the next trade. Bears push below the moving average. Then they attempt to go lower again, but fail. And now we're getting this double bottom here. Good looking bullish signal bar closing above the moving average. So go for 2 times your risk. That puts you up here. So you would have lost on your first trade basically 1 unit of risk. in your second trade, you would have gained essentially 2 units of risk. So you would have been profitable out of these 2 trades here. You would have been decently profitable. That would have been a right trade with good size, and this would have been a very profitable day for you. So are you able to identify the trend, wait for pullbacks to the moving average, and then take trades with the proper risk to reward ratio? If you can, this is the type of day that you can be having. Just have your patience, wait for the pullbacks, wait for your good signal bars, and you take those trades, and that math will play out, and you'll start having better trading days. I have another day to show as an example. Market gapped up here. We have a double bottom here with this bullish signal bar. It's a double bottom with the first bar. Then pullback and a double bottom here with a good looking bullish signal bar. Now this is close enough to the moving average for me to consider it a test of the moving average. So double bottom around the moving average, good looking bullish signal bar. All right, you can just take a standard trade, just go for 2 times your risk. I often do put my stop below that signal bar. A lot of traders would put their stop below this low here. This is probably the better trade. I think you can take advantage of more profit if you're going for 2 times your risk. Look where the market comes up to. Comes up right up to that level. So double bottom at the moving average in a bull trend, 2 times your risk puts you up here. As the market moves up, look how it comes back and reacts to this moving average. It tried to break out, and then the bulls were able to buy into the close of that bar to keep it above the moving average. So the bulls understood what were happening and were attempting to keep that above the moving average. Then what do you get? Bullish signal bar. If you take that long during that day, you aren't able to get full advantage. You'd have to hold that overnight to be able to try to get out here. However, you'd at least be able to, that there was a move up into the end of the day on that. So what are the steps we're talking about? It's identifying the trend, waiting for pullbacks to the moving average, and taking swing trades above those good looking bars. So we have a short trade here. What we're doing, the market has been in this larger bear trend. There's been a lot of selling today. And this is the 2000 tick chart. So market's been down, right, below the moving average. Lots of opportunities to be shorting below the moving average. What we've had here, I'm going to draw in this level here. Maybe something like this. All right, so we have the moving average coming down. Market breaks above it. It tests this level here, tests it again, breaks out above it, fails to continue up, and then breaks down below it and the moving average. Tests it here, and tests it here, and then you get a good looking bear signal bar. And with the market having so much selling today, we like to bet that that selling is going to continue. So I'm shorting below it, going for 2 times the risk. So the reward is down here. So while we're waiting on this trade to play out, let's look at some other opportunities for selling today. So 9:30 is here. Market opens here. There's a couple legs up and then a leg down. Market tries to go up again, and then it starts to spend more time below the moving average. And then more time and more time. At some point, right, you start looking at, there's this level and then this level, and now we've broken out below that, and now we're failing to go higher. So you can see there are opportunities to short here at the moving average. Now, you didn't know the day was going to be such a strong bear trend yet, but it's reasonable to start taking bets that market that the trend's going to continue. So you could sell here, for example, and go for, maybe you'd get out here, or you'd have to hold through it. Second entries are better. You can see if you sold here and put a stop right above, you would have been stopped out. Now, you would have made up for it on the second sell, but goes to show that when you have so this is a first entry short here. So we have a low, then pulled back. The first time the market goes below that bar is here. So first entry short. Pulls back again, and then you have a second entry short. And the second entry shorts are better than first entry shorts. So we can keep on looking down. Now, what you can do is basically just take any, if the trend is strong enough, you can basically just be taking any short. So like if you sell below here, yeah, you'll be stopped out above here. Or maybe you can put your stop here and then you wouldn't be stopped out. And then you take this short and you would make up for any of your losses there. Right, test moving average, short below, test moving average, short below, test moving average, short below. All of those, if you're taking those shorts, that would have worked out for you. All right. So on our trade here, market's trying to push lower.
Order filled.
Oh, I had a separate trade on a different market, so I'm not gonna worry about that though. Market's getting close. We're gonna go ahead and move our stop down there, just in case the market comes all the way back. I don't want to end up having loser above like a 5-point losing trade when we got this close. So you're looking for the trend. You want to identify what the trend is. If the market's going up, you want to be taking longs and only be looking for longs. You don't need to worry about doing these other trades like against the trend, trying to scalp and scale in against the trend. That's a sure way to end up losing, especially for beginners. Advanced traders, they have more experience. They know what they're doing. They can manage it better. But really, for all beginners, really for all traders, the best kind of trades they can take is going to be going in the direction of the trend and swinging. So as we're getting closer to our order being filled here, just need a little bit more. If it gets down to this low again, I'm going to go ahead and move my stop pretty tight here. At this point, 2400 down here, big round number 2400, that's getting pretty close. You could see it being you could see it being just one quick sell off away from getting to that. All right, like I said, I was going to move my stop pretty close. If we get like one tick away like that, then I want that stop to be pretty close.
Stop filled.
All right, so stop got filled there, but still made a decent profit, and I think that's a good example of how to trade the trend, right? Sometimes the trend is going to be just going straight down. It's going to stay below the moving average, so you can keep on taking shorts like this. then the trend's going to adjust and it's going to spend some time above the moving average. But then you can look for it to get back below the moving average and then start taking shorts again. And then this is kind of a setup I like to look at. You have when you see multiple tests of a level and then you see it break out, but then the breakout fails and it pulls back and tests that level again, and then you start getting shorts again. And this is effectively like a head and shoulders top. So head, left shoulder, head, then right shoulder, right? And so that's what a head and shoulders is. That's what's happening. So, but I don't quite see it as a head and shoulders top. I see it more of a test of a level, a failed breakout, and then a retest. And then you can start looking for trades again. So let's recap. The moving average is not magic, but it does provide context. So the moving average is not going to give you perfect setups every time that are always going to work, but it does keep you in the loop of where the market's going. And in the second point, it's respected as a level of support and resistance. As you study your charts, you can see how the moving average acts when it touches the moving when price touches the moving average. It's going to act as support and resistance more often than not, especially in a trending market. Moving average should not be used alone, but in confluence with the price action or other factors that you see on the charts. The last point relates to both the moving average but also trading in general. You want to trade with the trend, and it's best to swing trade. It's best to try to go for 2 times your risk or more.